Hey everyone, welcome back to Corporate Decoder, the place where we slice and dice those confusing corporate filings. Today we're diving into Critical Metals Corp's latest report, and let me tell you, it's a wild ride from lithium dreams to potential Bitcoin schemes. I know, sounds crazy, but stick with me. Alright, straight off the bat, this isn't a brand new report, but an update. Seems like they're tweaking their story after their initial filing back in May, adding in some audited financials and giving everyone a general developments update. Okay, so there's a primary offering of 7,750,000 ordinary shares coming from warrants they need to fulfill. Warrants are basically options to buy stock at a set price. Then there's a secondary offering of a whopping 100,312,567 ordinary shares from existing shareholders looking to cash in. All the shares can be resold as long as this registration statement is available for use. The company is incorporated in the British Virgin Islands, which is important to remember as it influences their regulations and tax obligations. A key thing to understand is that this company exists because it bought European Lithium, or EUR, in a business combination. They swapped shares and now EUR is a major shareholder. They also did what's called a PIPE financing, that is private investment in public equity, raising $10 million, selling shares to some big investors to secure funds. The closing price was below the effective share purchase. A lot of the major shareholders, but not all, have agreed to a 1-year lockup period, meaning they can't just dump their shares on the market. This is supposed to help stabilize the stock. They also have a deal with GM, basically a promise that GM will buy up to $125 million in shares when Critical Metals needs the money. To sweeten that deal, GM also got a warrant to buy almost 2 million shares at a fixed price. What's interesting is that before the closing, lots of Sizzle shareholders redeemed their shares for cash, basically saying, nah, we don't want to be part of this. That cost the company a big chunk of change, about $153 million from their trust account. This is very important. This prospectus covers up to 84% of their outstanding ordinary shares on a fully diluted basis, meaning when all possible shares are counted, all these shares being dumped on the market could cause a big price drop. They were very clear about this in the report. They have a 42% interest in the 10 Breeze project, a rare earth mine in Greenland. If they invest $10 million in exploration within 2 years, they can bump that interest to 92.5%. Also, they have a joint venture brewing with a group called Obakan to build a lithium hydroxide plant in Saudi Arabia. It is a smart move to save cash and improve infrastructure. But here's where things get really interesting. They're planning to adopt Bitcoin as a primary treasury asset. They might issue up to $500 million in convertible notes to buy Bitcoin. High risk, high reward strategy here. They just did another private placement agreeing to sell almost 5 million shares and warrants to certain investors for about $24.5 million. Sounds like they agreed to drop some anti-dilution protections on the Bitcoin convertible notes to make the February PIPE financing more attractive. T-scroll, the date of this prospectus is due to sales of a substantial number of air securities in the public market could cause the price to fall, a key risk being that existing security holders may experience a positive rate of return while new investors don't. It means that the selling parties will make a profit while your returns may be negative. Another risk is their long-term success hinges on actually implementing their business strategy and getting those mines up and running, and there are many things outside of their control, such as government permits, market conditions, and prices. A key personnel risk is the management team has no or limited experience operating a US public company. They may be unprepared for the complexity and compliance burden. Here's a bit more detail about that GEM deal. If Critical Metals couldn't come up with a cash payment, they'd have to give GEM even more shares or face penalties. As of the report, this was outstanding and had to be resolved. This is the other big thing that may dilute and drop the price of the share. They will receive $122.1 million if all the warrants are exercised. Because one shareholder, European Lithium, controls the company, they are a controlled company, giving them exemptions to standard corporate governance requirements. This section is basically saying sales of stock in the public market could cause the price to decline. They have a corporate opportunity waiver, meaning directors might have conflicts of interest in choosing what opportunities to bring to the company. Now let's take a step back and look at the big picture. Critical Metals Corp is definitely in a high-risk, high-reward situation. The success is heavily reliant on the Wolfsburg and Tanbreez projects actually producing and on the demand for lithium, rare-earths, and other critical metals. The shift towards Bitcoin is interesting, but it adds another layer of risk, especially with the company's current financial state. Those low prices that the insiders obtained give them a great return at the expense of public returns. A lot hinges on their ability to raise more capital, which will likely dilute existing shareholders. There is a lot of dependence on agreements with GM and ability to secure funding. Based on a volatile market and low trading volume of the stock, as well as high risk, high return strategy, I'd be slightly bearish on this one with a price range of $2.50, $4 until the company shows they can actually execute some of these plans. There is a very high probability of a price decline due to the high volume of outstanding shares. Thanks for watching. If you enjoyed this breakdown, please subscribe,